everyone, welcome back to the Mindful Crypto Life. I'm filming this right now straight from Dubai. This week, the US has struck an attack in Iran. Oil prices spiked, the stock market has sold off. The whole region where I'm living in is in the headlines, and Bitcoin went up 11%. I want to talk about what this actually means, because I think that most people who are watching the news this week has missed the bigger story that's happening in crypto. And honestly, being here and living in this region, I'm actually watching this all play out in real time, and it actually changed how I think about Bitcoin. Let's give you a quick context before we look at the charts, because number alone don't tell you the full story. At the start of this year, Bitcoin was actually sitting around 97,000 and even touching 125,000 at its absolute peak. Then came your brutal correction. Over 6 weeks, Bitcoin fell down to $60,000. That's nearly a 50% drop. And then this week happened. US military action in Iran. Oil spiked above $80 per barrel. The S&P 500 sold off. European markets fell. Gold hit record highs above $5,300 per ounce. Every traditional safe haven asset has done exactly what you'd expect it to do during a geopolitical shock. And I'm sitting here in Dubai, refreshing the charts, watching Bitcoin close the week up to over 11%, from the low of $65,000 all the way up to $73,000, a $1,400 move off from the bottom on this week's candle alone. That does not happen by accident. Something real is shifting in how investors sees Bitcoin, and I want to break down exactly what, because understanding this has changed how I personally think about my own portfolio. There are 3 reasons why Bitcoin has done what it did this week, and I want to go through each one very clearly. Reason number 1, Bitcoin is already beaten up. We came from $125,000 down to $60,000. That's a 42% drop from the all-time highs. By the time the news conflict broke, the sellers have already sold. There was barely anybody left in panic to sell. The fuel for a further crash was exhausted. Reason 2, big money is accumulating. Spot Bitcoin ETFs, the products run by BlackRock, Fidelity, the largest asset managers in the world, both added over $1 billion in just a week, $250 million in a single day. You don't buy $250 million in Bitcoin if you were scared. That is deliberate, patient accumulation from people with far more information than most retail investors. Reason 3, and this one I personally felt being here in the region. War costs a lot of money, massive amounts of it. Governments on every side of each conflict prints more currency, take on more debt, and weaken their own money to fund military operations. That has been true in every major conflict in the entire history. Bitcoin has a fixed supply of 21 million coins. No government can print more. No central bank can inflate it. And this week, with the conflict literally breaking out in our balconies, I watched Bitcoin behave like something that people trust to hold its value when traditional systems are in pressure. That is the fiat debasement thesis. And right now, it is not theoretical. It is playing out live. Let me show you where Bitcoin sits in the chart right now and the key levels that I'm personally watching. Remember, this is not financial advice. These are just the key levels I personally wrote down and personally watching. Right now, Bitcoin is trading at $73,000. Today, we opened at $72,600, and we hit a high of $73,500 and a low of $71,700. So, the range today is around $1,800. Before we look at the key levels, let's talk about the moving averages. As you can see here, these 3 colored lines in the chart are the 7-day, 14-day, and 30 days moving average. On the daily chart right now, they're all sitting below the price at 68,700, 67,700, and 68,100 respectively. And critically, they're all curving upwards. That is called a bullish MA or moving average alignment. Price is above all 3 and they're pointing all at the same direction. And that has not been the case for most of the past 2 months. Up here at 74,000, this was today's high. Price touched it and pulled back. This is my immediate resistance. A daily candle that closes above this level, not just touching it, but actually closes, would be a genuine breakout signal. And just above that, at 75,000 is your big decision zone. This was support on the way down in January. Old support becomes the new resistance. A daily close above $75,000 would be the first real structural bullish signals on the daily chart since all-time highs. Up at $80,000, I would call this a major wall. This is usually where the waterfall selling is accelerated. Remember that a lot of people bought Bitcoin at above $80,000 and watched it fall down to $60,000. Most of those people are sitting in losses and are just waiting for the right moment to sell, at least to break even. This is called an overhead supply, and that is a real obstacle. Below current price, 71,700 was today's low. It actually held. As long as we stay above this current level, the current recovery is intact. Below that, $70,000 is your big round number floor. Round numbers attract enormous order flows. Think of it as your second line of defense if 71,700 breaks. And down here at $65,000. This is what I would call a line in the sand. If we pull all the way back and lose $70,000 on the daily close, this is the next major test. Bulls would have to hold this level, or the recovery story is over. Zooming out on the weekly chart. Now, this is where things get interesting. We opened at 65,700. We get down to 65,200. That was the capitulation flush, and we're closing the week near $73,000. That is a green candle body of over $7,000 on a massive volume. A candle like this that opens near its lows and closes near its high on above average volume is one of the strongest bullish signals in a weekly chart. And here's the detail that I really want you to notice. This yellow line is the 7-week moving average, sitting at 72,700. Price this week closed above it for the first time since all-time highs. The moving average crossover on the weekly is the kind of signal that institutional algorithms is programmed to react to. It doesn't guarantee anything, but it's the first genuinely bullish technical signal on the weekly chart we've had in months. The blue line up here, which is at 81,400, is the 14-week moving average, still above the price. That becomes the next resistance after we break into the $80,000 wall. The pink line way up at 96,000 is the 30-week moving average. That is your long-term bear signal. Until Bitcoin reclaims that level, the macro trend is technically still bearish. But the steps we're seeing this week is the real progress. I want to be really honest with you with what I'm thinking and doing, because that's the whole point of this channel anyway. Living in Dubai this week has been so surreal. The conflict news is in every conversation. People here are watching the oil prices, watching the regional markets, watching everything. And I've been quietly watching my portfolio take upward while the traditional markets fell. And that is actually a very strange feeling. I'm not gonna call this the bottom, because I've been wrong before and I've been wrong over and over again, just like you. What I can only tell you though is what I've noticed about Bitcoin and how it behaved this week, holding through this genuine geopolitical fear, with institutions buying, with the weekly moving averages confirming. This is not random noise. I think something is different on how Bitcoin or this asset is being perceived right now. Personally, I've been dollar cost averaging or DCAing through the entire correction. Same amount every week, whether Bitcoin is at 60K or Bitcoin was at 100K. No timing, no panic, just consistency. And weeks like this is actually why I stick to this strategy, because I would never have predicted that a military conflict in the Middle East would be the very week that Bitcoin actually recovered. 3 things I'm personally watching this week. First one, can Bitcoin close a daily candle above $74,000? Second one, will it hold 70,000 as support? And lastly, on the longer term, can bulls eventually crack down $80,000? Those answers will actually define the rest of the March for me. Well, I hope that this gives you a clear picture of what's actually happening. Not just the price number, but the story behind it, because this is how I want this channel to be. And if you're in Dubai, please stay calm and please stay safe. If you like the contents of this video, don't forget to subscribe to my channel. Again, this is Sky from the Mindful Crypto Life. Have a good one and I'll see you on the next video. Bye bye!